Good morning and welcome this morning to Trading the Trend, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there by my good friend and longtime partner in presentation, Scott Thompson, who's out there in the chat helping out. By the way, just quick apology for any technology delays that we saw here this morning. We're back up and running and rocking and rolling here. So we're going to get into this discussion. James Boyd is on vacation. I am not wearing a green shirt. I'm not wearing a red shirt. I'm wearing a gray shirt, which befits perhaps the general mood of the market today. We're going to take a look at that here. We're going to talk about trend in a couple of different ways. So I'm going to say this at the beginning of the discussion, that this is a bit of a one-off from the discussion. I'm not James Boyd. I don't play James Boyd on TV. I've got my own ways of looking at trend, and we're going to talk a bit about those as we get into this discussion today. So I'm grateful to have Scott here joining me. He's going to be out there answering questions in the chat. Thanks to all of you, whether you're joining us here live or whether you're watching the recorded version of this webcast. Participate in the chat. That chat is going to be live here if you're in the live session. If you're in the recorded version, leave some comments and we will have that discussion along the way. And we'll get back to you on those comments. So let's jump into this couple of quick housekeeping items before we get right into the day, as it were. We're going to take a look at a couple of things here when it comes to trend. So remember that everything we talk about simply for illustrative and educational purposes only. It is not a recommendation. It is not any kind of an endorsement of a particular security or pattern or strategy. If we talk about options, remember that options carry a high level of risk. They're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before considering any option strategy. Now, we're going to use technical analysis as befits the topic, but there are other approaches like fundamental analysis, probability analysis, and statistical analysis. They're all theoretical in nature. None of those are guarantees as to what's going to happen. But Schwab doesn't recommend these to technical analysis as sole means of investment research. We're going to be focusing on the Thinkorswim desktop software platform, specifically the paper money version. Remember that paper money version is a great sandbox to learn, but it doesn't guarantee what's going to happen out there in the real world. Also, remember that everything that we talk about, again, when we talk about investing, involves risk, including the loss of principal. So be aware of that and recognize that past performance doesn't guarantee future results or success. Now, when we talk about stops in this discussion, a couple of things quickly. Stop orders and stop limit orders allow us to specify the activation price, but not the execution price. And so in the event of a stop limit order, there's the possibility that we could miss out on that order getting filled entirely. In the event of a stop order, there's the possibility that that order could get filled at a significantly different price than what was expected, especially in a fast-moving market. So we'll talk a little bit about that. Now, one of the things that I want to talk about, I'm fine with discussions going on about tariffs and questions about that in the mix today, but I would ask simply from a courtesy standpoint, and from a standpoint of what we're going to be focusing on in this discussion today, make sure that the tariff discussion stays apolitical. We can talk about the impact on the market. We can talk about all those things, but once it starts branching out into that political aspect, then that's where we need to kind of rein things in a little bit. So we're going to talk a little bit about technical analysis and how it helps us to identify trends. We're going to talk about trends in multiple time frames. And we're going to look at some examples on the chart. Now, speaking of using technical analysis as a means to identify trends, what I'm going to show you here really quickly as we jump into this discussion, if you have a desire to learn a little bit more about this, I'm at schwab.com/coaching, and I'm over here on the in-person events calendar. And coming up next weekend, the 11th and 12th of April, I'm going to be, along with Ray Kimbrell, Scott Durfee, Kevin Horner, who is in our Trader Talks webcast in the mornings, kind of setting up the day. We're going to be there talking about technical analysis and option strategies. It's a 2-day live workshop. We welcome you to come and join us. Come and get, to get in that room with a bunch of like-minded people. The first thing that we talk about in that workshop is identifying trend and how do we use trend as a means of making a decision, right? And oftentimes what tends to happen is we approach the market from a perspective of maybe our own ideas about what the trend should be and not what the trend is. And so we'll talk about that as we get into this discussion today. But again, that's going to be a great resource for you. We're going to be doing that one again in Denver on May 2nd and 3rd. And then again, down here when we get to July, we're going to be doing that again in Santa Clara. But we've got a couple of other things going on there as well. We've got an advanced option strategies workshop coming up in Dallas on the 25th and 26th. We've got another one of those coming up in Anaheim, California on the 30th and 31st of May. And then we've got a phenomenal market drive event coming up in Miami on June 13th. And hey, Jimmy Buffett says everybody has a cousin in Miami, so come and visit your cousin. Join us for the market drive event on the 13th of June. Let's pop over here into the Thinkorswim desktop software platform. And as I do so, this is a great opportunity for me to quickly remind you to click on that subscribe button down at the bottom of the page. And here's the reason why you want to do that. You want to click on that subscribe button because it does a couple of things. One, for you, it makes it easier to find this content. Two, it brings that content up to the top of the algorithm, so that helps other people as well. Three, it allows you to set alerts for new content, new archives that get posted. And maybe the best part of that is that it is at no cost to you. So click on that subscribe button, allows you to keep track of and stay connected to this Trader Talks webcast channel. So today's an interesting day. You know, I said this last night when I was teaching trading growth and value stocks, that it's been kind of an interesting market. It was an interesting day. Yesterday, we saw an up day here in the S&P 500. I'm on the SPX, and we saw a little bit of a gap down today and a bit of a sell-off. Nevertheless, there's a little bit of a bounce coming up, a little bit of a push up off of that low. If we look at this candle, these are one-day candles. Some buyers perhaps stepping in at the bottom of that candle and pushing price up. And that certainly seems to be logical in the sense that when you see a big gap down, when we see a big news-driven move, even though this was, you know, kind of expected news, the magnitude of its impact is never known. But some buyers are stepping back in here. And we can see the same things happening here on the NASDAQ, coming into a little bit of a spinning top type of candle here, and on the Russell 2000, creating this kind of long bearish candle, but building a big tail down on the bottom there as the candle starts to see a little bit of buying pressure on the Russell 2000 on those small caps. I'm going to pop back over to the SPX really quickly, and I want to pop into our 5-day, 5 minutes. So this is kind of the intraday view, and you can kind of see those drawing tools that I've got on here. Here's that circumstance where we saw price bounce up off of that support, and it started to rally. We saw the gap down after the news yesterday, after market close, and we've started to see this little bit of a rally. Now, here we are. It's 11 o'clock Mountain Time, which means it's about 1 o'clock Eastern Time, which means that likely traders, those algorithmic traders, those institutional traders, those floor traders on the market that are still as such, are coming back from lunch, likely, right? So we've seen a little bit of buying pressure coming off of that kind of rebalancing low here, back down to about that 54.16. Now ahead of lunchtime, starting to see that push higher. Buyers were stepping in, kind of paused for a little bit here the last hour or so, and starting maybe to see a little bit of activity happening here. If we were to change these to 1-minute candles, we might see a little bit faster movement. Now, what I did to do that is I went to our time frame and I dropped down to a custom time frame, and I just adjusted the candle aggregation period to 1 minute. That's going to become important when we start talking about trend. But what we're seeing here now in the short term, as I shorten up these candles, is we had that upward trend. Now our trend coming into the end of kind of that lunchtime period is a little bit lower, but it's still there. I mean, we're still seeing kind of this upward push, we're still seeing a little bit of RSI or sentiment-driven push to the upside. So here's what I want to do. Now that we kind of have this sense of what's going on, I'm also going to pop over here to our VIX grid. This is the volatility index of the S&P 500. And this is that suggestion of kind of that fear gauge, right? The idea being that institutional investors, when there is news, they become reactionary and they buy, for instance, put options on the SPX to protect. When there's a lot of buyers buying protection, that protection becomes expensive, volatility increases. And that's what we've seen here. But we're also noticing something that is a little bit different. We might say one of these things is not like the other. One of these things just isn't the same. Because look, we get these big spikes in volatility on specific events, right? This was the Japanese yen carry trade unwind. This was kind of the initial perspective of tariffs at post-election. Then we see this kind of wind up into the tech sell-off. Now we see this gap up, but into a bit of a spinning top, if you will, right? Think about this, right? Equal distance, top and bottom on those shadows or wicks on this candle. Now, the VIX, to be fair, doesn't trade like an equity, but we see the movement effect of it. That VIX is contracting already. We're starting to see a little bit of a bleeding off of that volatility that got kind of pumped in on this big down move. And that is indicative of a move where those institutional traders react by buying that protection. But then they're very quick to take that protection off if prices halt their downward move. That's why I was saying it's so important that we were seeing those lower shadows on the candles on those indexes, right? On SPX, on NASDAQ, on SPX, or excuse me, on the Russell 2000. The fact that we were seeing those lower shadows suggests that this pressure is no longer, at least at the moment. Day hasn't closed yet, but at least at the moment, there's no longer that downward crushing selling pressure going on. There's a little bit of buying pressure coming up. And that's where we get to, Julia, that question of sentiment push, right? Sentiment is starting to push price a little bit higher. Buyers are starting to step in and nibble a little bit, okay? Now, a couple of things to think about here in terms of volatility. Volatility creates movement, right? Right? And exactly exactly that point, to speak truth's comment. We had a big move today, right? I mean, 4% roughly, in some cases on the indexes. In some of the stocks, 90, well, I think Restoration, we'll look at Restoration Hardware here in just a second, down almost, actually a little bit over 100 points, a bit better than a 40% drop in Restoration Hardware. So the VIX not being over 30, not spiking above that 30 handle range where it has been once before in this kind of recent time frame, suggests that maybe there is a little bit of muted response here or measured response. And here's okay. So I don't want, but when we come into trend perspective here, I want to talk about some of the reasons why this might be the case, because this was kind of that initial push into tariffs. This was the initial fear. This was kind of the second push. And then this was the move that was expected, right? Everybody expected it. So think about this. You go see a horror movie, and the first time you see the horror movie, I don't know why anybody would see a horror movie. I don't like horror movies. I'm just saying. First time you see a horror movie, the killer jumps out and you jump, right? And it's a big scare. The next time you see it, you know what's coming. You might get a little bit of a scare. Third time, you still know what's coming, and maybe you don't jump as much. You're still reacting viscerally, right, and emotionally, but you're not seeing the same kind of just outstanding move. So it might also be the sell the rumor, buy the news type of scenario. And again, that's not a guarantee by any means. Let's do this. I'm going to pop over to my single grid. And my single grid is just simply a sandbox that we can play with here and add a bunch of studies on, right? So as we look at this, as we look at this perspective, and again, Carol, I absolutely understand that perspective, and I absolutely bring that into this mix. And so if I'm making comments that seem flippant, please understand that I'm not being so. I am sensitive, and hey, I mean, I'm seeing the impact viscerally as well, as I'm sure Scott is, to investments and trades that we've made, right? So looking at this trend, this becomes the challenge in terms of trading a trend, or in terms of determining what the trend is. So we have to make kind of this perspective of, do we have a new downtrend, or what is the significance of this particular downtrend? And I think this goes back to the question that was asked earlier, which was, how do we look at trend in the context of timeframes? So this is a 1-year time frame, and this is a typical time frame that we would look at on a chart, right? 1 year, 1 day, each one of these candles representing 1 day in this mix, right? And if we were just simply looking at a count of higher highs and higher lows versus lower highs and lower lows, right? We could just kind of come in here with our magic marker, and we could line those out, and we could say higher high, higher high, higher low, higher high, a little bit lower low, equal high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then we kind of get these periods of lower highs, lower lows. We have this little bit of a short-term downtrend. Then we get a new higher high and a new higher low and a new higher high, and then boom, 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 boom. We start getting into this intermediate term downtrend, right? And that's the kind of separating line, the distinction here, because this time frame right here, this is, we might call this week or months to years, right? Months to years, this is a long-term trend. Okay. And for the purposes of our discussion, that's going to be our long-term trend definition. But now once we start to get into this period where we're making lower highs and lower lows over an extended period of time, meaning more than, say, a couple of weeks, now we're into kind of this intermediate term. I'll just label it IT, intermediate term downtrend, right? Lower highs and lower lows. And now we have to make a decision. What trend is it that we are focusing on in terms of making trading decisions? Is it a change in this longer term trend that we're now trading? Is it a change or a potential change in this intermediate term trend that we are now trading? So that kind of becomes the process of trend identification. First is identifying those highs and lows and where they exist. That can give us kind of that basic understanding of that trend perspective. And Carol, I absolutely echo Greg's comments. I echo Scott's comments here in this discussion. So here's what I'm going to do. There are a lot of different technical indicators that we could put on a chart to help us to identify trend, right? And one that we can use, and I know there are lots of different moving averages that we could use. I know that James likes to use a whole moving average. Cameron likes to use a triangular moving average. And each one has its own advantages and disadvantages and limitations. So the one that I'm going to use here for ease of use and for simplifying this discussion is simply a simple moving average. Okay? And a simple moving average, just because it says simple doesn't mean that it's any worse or better than any other moving average. So I'm going to use a 200 period moving average, which is just about that 1 year time frame, right? We've talked about this before, that this is kind of that expression of that longer term trend. I'll make that a 3-point wide moving average. And I think the importance of this, despite the fact that we have that we've seen this move to the downside, the fact that the longer term trend is still, if we look at this 200 period moving average and we look at it in the context of highs and lows, low, low, and low, those are still making higher lows. So is all lost? No. But what do we do now? right? What do we do now in terms of making a decision, right? Now we've had lower highs, lower lows. Here's really kind of, again, the critical level in terms of this trend. And I'm just going to draw this in, trying to draw that straight across. When this long-term trend takes out this significant low, that August low right there, if it takes that out, that becomes a significant change to this long-term trend. And that long-term trend now becomes really, I think, at that point, over. But we're not there yet. We're simply in an intermediate term downtrend. Will this persist? We don't know. And even a trend won't tell us that. It'll tell us what might happen, but it's never going to guarantee what will happen. So here's what we're going to do is we're going to put on here another moving average. And I'm going to go to my flask icon up here at the top, and I'm going to put on a 50, SIMP, 50 period simple moving average. Okay. And I'm going to adjust my simple moving average. We'll make that a 50 period. If you think about that, that's about one trading quarter. Okay. That's about a quarter. And I'm going to make that 3 points wide. And I'm going to click on OK and apply and OK. And we can see the trend direction reflecting this intermediate term trend. Okay. Now, if we could continue this to reductionist perspective, right? We could say, all right, I could put on a 10 period moving average or a 5 period moving average or a 9 period moving average or a 20 period moving average. It doesn't matter. Just something that's shorter than 50 is going to give us that short-term perspective. Now, because trends become, especially when we're in a state of flux like this, right? When trends become different than what we expect, right? When we see this downtrend continuing, right? We see this push to the downtrend, to the downside happening. We want to get a sense of maybe what's internal to that trend. So I want to do two things. One, I want to talk about that sentiment. I want to talk a little bit about sentiment and momentum. And two, I want to talk about maybe from a behavioral standpoint, from a psychological standpoint, taking some of the emotion that maybe these moving averages might bring to the mix out of the equation a little bit. Would that be helpful? Hopefully it would be, right? Okay, so here's what I'm going to do first. I'm going to add two indicators onto this chart. And I'm going to add those for the very specific purpose of looking at what's going on internal to this big move to the downside relative to this downward trend, this intermediate downward trend. So I'm going to come back up here to my flask icon, and I'm going to put on this chart, I'm going to put on RSI, Relative Strength Index. And you've seen me use this before, right? I'm going to click on Apply, and I'm going to click on OK. And so the reason I'm bringing this particular technical indicator into this mix is this technical indicator, the RSI, I'm going to grab my magic marker to do this. The RSI is looking at where prices are closing. If this is our candle, and here's our high and our low for the candle, the RSI is looking at where price is closing. Is it closing closer to the high, or is it closing closer to the low of the candle, right? And depending on where it's closing, depending on where price is closing relative to the highs or relative to the lows, that's telling me, is there bullish or bearish sentiment within that candle? There's an implied presumption there. The presumption is that if prices are closing closer to the highs of the candle, that's bullish. If prices are closing closer to the lows, that's bearish, right? So if we're seeing an RSI print, even though this is moving down in the short term, and we look at two equal points, this point right here on price compared to this point on the RSI, and this point on price right here compared to this point on the RSI, this is where the understanding of divergences becomes so important, because what this says is that even though price is still making new lower lows, right? And we're seeing price kind of moving closer to those highs. The RSI, even though it hasn't pushed to the downside, even though the day's not done, the fact that that RSI, which, by the way, an indicator like the RSI is going to lag, But you can see the divergence that's setting itself up here, right? So a push to the downside in price coupled with this, what we would refer to as a bullish divergence in the RSI, suggests that maybe there's a little bit of buying pressure happening here. Now, what does that mean for us as trend traders? Well, if that means for us as trend traders that we might be looking for that possibility of a reversal. Now, we're going to quantify that here in just a minute. But I also want to corroborate this indication, because one indication from one indicator may not be enough, especially in an emotionally, psychologically impactful scenario like we've seen today. We might want to have a little bit of additional confirmation to make sure that, yeah, I mean, look, belt and suspenders, right? So let's add the suspenders here to the belt. Let's add MACD, and I'm going to add the MACD histogram to the mix, and I'm going to click on apply and okay. You might say, well, fine. One indicator giving us a divergence isn't, is fine. But what if two indicators are giving us an indication of a bullish divergence? And so here's what I've got. I've got the MACD, which is moving averages, right? Moving average convergence divergence. So that negative push here on that point right there, it was down here. Negative push in sentiment, right? And momentum. It was a really strong downward move. Now we get this little downward move here to a lower low. So price is still doing this, right? That hasn't changed. Price is still making lower lows. But look at what this momentum indicator is doing at that equal point here. It's starting to make that divergent move to the upside. Now, could it continue to move down? Yes. But boy, I'll tell you what, I mean, right now, objectively, you've got a bullish divergence setting itself up on two separate technical indicators, oscillating momentum indicators that are giving us that indication, right? So what does that suggest? Well, this is objective evidence that buyers are starting to step in. Now, does it mean that they're going to be buying up? Absolutely. And they're going to be buying with both hands? No, we don't know that, right? So is this divergence being confirmed on a 15-minute chart? Well, it was on the 5-minute chart, right? It certainly was making that divergence happen, that bullish divergence happen on the 5-minute chart. We can look at that, right? Let's take our time frame back to our 5-day or our 15-minute chart. And sure enough, it is making that echo in the 15-minute chart. Here's 15-minute candles. I'll draw these in. We'll say, oh, whoops, no, I don't want that line. I want this one right here. Lower high or higher lows on price. And we're seeing higher lows on a shorter term MACD, higher lows on the RSI at equal points. So this is being echoed in those short term, right? Okay. So yeah, it's bullish in the sense. Okay, Doug asks a question. It's bullish because it's a weak RSI on a downtrend? Yeah, exactly why. And here's the reason why. Let me how long do we have today, Scott? Do we have like 2.5, 3, maybe 4 hours to talk about all this stuff? Because we could do that. You guys want to stick around for that long? I'm not going to make you do that. We're going to go back to our 1-year daily chart. So the other thing that I'm going to bring into this mix is I'm going to take this out. I'm going to hide those two studies really quickly here. And I mean, in fact, even going to hide those moving averages. I'm going to click on apply and okay. And I'm going to come back and I'm going to say, let's take our time frame out to our max monthly time frame. What's the long-term trend of the S&P 500? What's the long-term trend of the S&P 500? It is bullish, right? So in this particular case, we look at this longer-term perspective, and this is a short-term blip to the downside in the context of that longer-term trend. But overall, the market has an inherent bullish bias. The market has an inherent bullish bias. That's why we look at those divergences. That's why we look at those divergences. So Larry asked the question, well, wait, don't we need a few days to confirm? Well, yeah, let's go back and let's look at this and say, hey, we've got 2 weeks of price movement giving us lower lows. on the price, but we've got 2 weeks of divergence on the RSI giving us higher lows on the RSI or on the MACD. So there we go. All right, so let's do this, right? So here's what I want to do. I want to take the emotion out of this equation, right? And the question Prasad asks is, what can we expect in the next 2 weeks? I don't know, because there's an element of uncertainty, right? The market doesn't like uncertainty increasing at a significant rate over a short period of time. That's what the market doesn't like. It can price in uncertainty. But let's do this. I want to put on here a technical indicator. I'm going to come back over here to the chart, and I'm going to put on here a technical indicator called the linear regression. And for those of you who have done statistics and are statistically kind of adept, you know that linear regression is simply a way of analyzing a data set, any data set. It doesn't have to be price, and it is simply curve fitting, but it's looking at the absolute high and the absolute low, in this case, for a period of time, and putting that into context, right? So here's the line, this line right here in the middle, and I'll change that line so that we can see it. It's a different color. I'm going to go to the gear icon. I'm going to make the middle line kind of this bright yellow, and I will make that 2 points wide, and I'll make it kind of this dashed color so that we can see it. That line right there, that dashed line right in the middle that's yellow, is a statistically determined trend line based on the period of time that we're looking at, which is a 1 year time frame, and looking at the high and the low, the absolute high and the low. So it's taking today's low, the current trading price of the stock, and in this particular case, or this index, and it's taking that as the absolute, and then it's plotting that equidistant up and down. So you can see where the trend is, and you can see where that absolute is. So that's the range that this trend has been moving in, okay? Here's what we're going to do. I'm going to put on here another linear regression curve, or another linear regression channel. And the linear regression channel that I'm going to put on, LIN is what I'm going to type in, is linear regression channel variable. Okay, linear regression channel variable. And what I'm going to do with this linear regression channel variable is I'm going to change where it draws that line, or those channel lines. So I'm going to go to my gear icon, and I'm going to change the width of the channel, not from 100%, but I'm going to change it to 68.9%. Anybody recognize the significance of that 68.9 channel width? And I'm going to come back and I'm going to make that a little bit different on those channel lines. Let's take that lower line here. Let's make that kind of a green, happy green color. And we'll make the upper kind of a happy red color. We'll click on OK and apply. There it is. Fibonacci's, absolutely. 1 standard deviation, 1 sigma, says Bob Epic, small steps. Yeah. It's both of those things, right? It's that 1 Fibonacci, it's that Fibonacci retracement level, it's the 1 standard deviation. So here's what I've plotted, guys, in this context. This is our trend right here. This is the absolute range of the trend, of that channel outside the trend. And this is 1 standard deviation, 1 sigma off of that trend line. Okay? Bruce has got it. Bruce, I'm guessing that you are likely a statistician. My dad's a biostatistician, so I get the relationship, right? And you're right, that represents idiosyncratic risk, right? Idiosyncratic meaning an exogenous event that may cause price to move. Okay, so here, what do we do with this, right? What do we do with this? Okay, so let me kill my annotations really quickly and we'll say, what do we do with this? Well, if this is our absolute, and this is 1 standard deviation, then what if we were to say, fine, if I want confirmation, I do like Bollinger Bands. Bollinger Bands are dynamically doing this, right? Good question. What if I wanted to see confirmation of price moving back within a typical range? 1 standard deviation is typical range. So an extraordinary day like today that pushes down to this absolute, when it comes back into this range, maybe that's when I want to look at entering a trade. Maybe that's when I say that's confirmation of potential trend change. So a trader seeing price moving outside that one standard deviation line and then possibly coming back in could use that as an entry. Now, some traders, Pima says, I'm looking for this one hammer candle to be my confirmation. And some traders will do that. Some traders may want, again, the belt and suspenders perspective and say bullish divergence and a break back into that one standard deviation range. And whether you use Bollinger Bands, whether you use Keltner channels, whether you use this linear regression scenario and setup, that may be that point. So the entry point into the trade may be the break back above or the close back above that move here. And you're right. And to help show that, right? And so we're going to see potentially this moving back. If it doesn't, well, then this continues to shift, right? And you still have this objective line here. So if this, then that. If price breaks above that one standard deviation linear regression channel line, then enter the trade, else wait. So it doesn't have to be on an index. We'll zoom back out. What if we were to take some of those individual stocks, right, that everybody takes a look at and pays attention to? What if we take a look at NVDA? And we say, fine, I'm down on that low. Here's my linear regression line right there. That would be a new higher high in the context. And that might be my entry signal into the trade. What about Apple today? AAPL. Gap down, looking for that move back up above that linear regression line. What about Restoration Hardware? The big wipeout today. There's our absolute low. There would be the entry point back into the trade. And then from a trend trading perspective, traders may look for maybe scaling into the position or scaling out of the position when it gets back to those midpoint, right? Okay. And, here's the thing about it too, from this perspective, Bruce, and I'm glad you said that because I don't have a dog in that fight in terms of buying the dip. But in terms of protecting a position, think about this. If you're buying protection when that trend has broken outside of that one standard deviation line, unless the news keeps coming, what does the market do? The market digests that information and incorporates it. Speaking of digesting information and incorporating it, you happen to notice right down there in the bottom of the chat, and Scott will pin that up to the top of the chat as well, there's a feedback survey. That feedback survey is how we digest the information that you give us to make these webcasts better. So do me a favor, click on that link and fill out that feedback survey. Now, I mentioned that it was National Burrito Day today. So here's what I wanted to look at is this opportunity, right? We now see price moving down below and back up above. This is Chipotle Mexican Grill. It is in a long-term downtrend. We can see how that linear regression line turned down. So if I were a trend trader, I might be looking for an entry in this short-term trend and an exit back here at that middle portion of the line. So we're going to go ahead and we're going to do that. I'm going to right-click and I'm going to buy custom with an OCO bracket. And the way that I'm going to set this trade up is getting into the trade here, getting out if it goes outside the one standard deviation range, and getting out if it goes up to that middle portion of that trend line channel, which is about 54.56. So we're going to set our limit order to 54.56. We're going to set our stop at that one standard deviation line, which is at 47.85. Remember, stops don't guarantee the execution price, just the activation price. So 47.85. And we're going to make those good till canceled. And we're going to look at getting into this trade on that short-term uptrend. Read through the order, make sure that that's what I want to occur. Make sure that I'm aware of any alerts that might be here. I'm going to put this in my stocks group. And I'm going to click on send, and we're going to fire that order off. And you can see how that order is coming together here, right? Cool. All right. Next one, let's take a look really quickly here. Yum Brands. And here's another scenario, right? Here's another thing to think about. How do you know about getting into a trade like this, where that short-term trend has been moving higher? Well, it's sitting outside that 1 standard deviation line. What's the likelihood of this to continue to move outside that range or to come back inside this range? So some traders may use this as an opportunity to maybe sell covered calls if they're long the stock, sell call spreads, create or buy long put spreads to take advantage of that potential downward movement, right? So there you go. All right. So my thought process here, guys, is to help give us some tools. The tools that I was using, linear regression channel and linear regression channel variable. And I set that linear regression variable channel to 1 standard deviation, and I applied it to the chart so that we could see the chart in context, right? From that standpoint. So that might be helpful, hopefully, in framing our understanding of trend in that context of statistical approach rather than our own kind of emotionally driven or psychologically driven interpretation of what that moving average is doing. Speaking of that, do me a favor, if you wouldn't mind, click on that link there and fill out that feedback survey. I want to pop over here really quickly once again to our in-person webcast page, as well as to the Trader Talks webcast YouTube channel to answer Siri's question. Coming up right now, next is market and sector analysis with Michael Fairborn, right? Let me make sure that that's the case. I think that's next, isn't it? We'll look at the schedule and we'll see. We'll come back over here to the webcast schedule. We'll go to our live webcasts. Oh, I think it's short vertical. So let's take a look at where we are. Here we are today. That was yesterday. Sorry, my site was stuck on yesterday, but that's going to be a great webcast. Market and sector analysis is a great webcast for digesting what's going on and what's moving. But we've got verticals and diagonals coming up next. Guys, thanks very much for joining me today. And my thanks, of course, to Scott for helping out there in the chat. Thanks to all of you for being here. Again, those quick reminders, and our great production staff for helping us out today. Have a great day, everybody. And you know what? It is, get outside in the sunshine. I mean, it's springtime. Let's sometimes you have to get away from the trend. So we'll see you guys again very soon. Take care, everybody. Bye-bye.